Welcome to Aha Math and Science. Well, it's time for a summary of this week's market. Wow, look at this table here. Everything is green, which is really kind of rare. So for the week, all the major indices were up, as you can see here. And the VIX was also up 1%. And as you can see, the small caps advanced about 3.7%, and it strongly outperformed the larger caps, which is like about 2%. So let's first take a look at the chart for the VIX. So the VIX was up for about 1%. That's not really much, for the VIX index. And so it was at this level, around 13.59. That was it will close on Friday. So it's now being kind of stuck in this 13.5, around this 13.5 range for like more or less like 3 weeks. So it's hovering around this level, and given that the major indices advanced for more than 2%, and while the VIX really did not change much, and this could be indication that there's more upside room left for the market. So the correction may not happen, anytime soon, and the VIX may have further room to go down. So that's the VIX that was telling us. And now let's take a look at this chart, and viewers of this channel probably is very familiar with this chart. I've been kind of talking about this for the past few weeks. So as you can see, we are now in this sort of positive, correlation territory, and the candle plot is the 10-year Treasury yield, and the purple curve is the Russell 2000. So prior to the bear market, these two kind of track each other. That's the positive correlation, and then during the bear market, they're negatively correlated. Now we're kind of back to the positive, correlation territory. So you can clearly see these three peaks. When the Treasury have a bump, the Russell 2000 has a bump, and then you have this second peak, and the Russell 2000 has this second peak. So now the Treasury yield is going up. You can see the Russell 2000 is more or less kind of following suit. So what is really interesting in this chart is, as you can see, when we draw this downward trend line, and for the past few weeks, it was kind of stuck on this upper limit of this trend line. It did not really kind of break out. But just for this past week, as you can see clearly, this is a green bar. So the 10-year Treasury yield decisively break out to the upside. So very clear. So if this positive correlation still holds, then we suspect the Russell 2000 will follow suit pretty soon, and it will also have a very massive breakout onto the upside. So we'll see what happens next. And this strength in 10-year Treasury yield is also kind of manifested by the strength in the dollar index, as we point out now about like more than 2 months ago. So in middle of May, the dollar index started kind of have this run up. So there's basically this is like a lead test of the 101 level, which you was seeing here in February 2023. So it did a lead test, and now it's kind of started to run up. And sometime like end of May, yes, there was a little correction in June, but this correction now is over, and now it did a high low, which is 102.07. And as you can see, the MACD histogram started kind of turn around and start to kind of become positive. You can start to see that. So as the MACD histogram start to turn positive, then the dollar index will have a lot of room to run up. So both the dollar index and the 10-year Treasury yield kind of collaborate with each other, and both are saying that the economy is quite strong. So that's why the 10-year Treasury yield and the dollar index are going up. So these are really kind of the main features we are looking at, from these two indicators. Now back to the major indices. As you can see, in the past week's summary, we point out that we had a red week. Now perhaps the correction might be. This is not even a correction, but it's just like a small kind of a step of consolidation, and now it's kind of started to run up again. So on Friday it closed at 4,450, So we are about like 100 points away from this left and the right shoulder of this head shoulder pattern. So that's around 4540. So it's about 100 points from here. And at that point, we suspect we will have a meaningful correction. So that's the larger caps. And then the Russell 2000 plotted here and versus the SP 500, which is the purple color, as you can see that while the SP 500 has about 100 points before a correction, the small caps perhaps has a lot more upside room. It first has to get to the top of this trading box, and then it probably even break out this trading box and then test somewhere around the March 2022 high. So this is around 2100, and that will be our target. And then perhaps we're going to see some meaningful correction at that point. So these are sort of our kind of leading of the charts. And as you can see that if this indeed can play out, this could suggest a relative outperformance of the small caps over the large caps, and that can be also seen from this plot here. And this is the ratio of the small caps, Russell 2000, to the larger caps, SP 500. We've been talking about this chart a lot, and we point out that last week on June 23rd, this is kind of getting to a low that is exactly at the support line, as you can see here. We point out that it should not really break the support line. Indeed, it did not, and just bounced back up. And then on Friday, it closed at 0.4244. So this is certainly very encouraging, indicated this is a meaningful support level, and likely that suggests that it will continue to kind of bounce back up. And as we point out, this could be a multi-year trend, indicating there's more room for the small caps to outperform the larger caps. So we think it's really a good time to actually get into the small caps, right now. So this really kind of also, is a very good sort of agreement with the reading from the 10-year treasury yield, as we point out just a few minutes ago that the 10-year treasury will break out, and this could suggest the small caps, which is now positively correlated with the 10-year treasury yield, will also start kind of move up. So all of this kind of pointing really to the same thing. Very, very interesting. And generally, I like to really kind of like when we think about like a thesis that we want to kind of discuss, usually we want to at least have like 2 or 3, sort of different angles to support that thesis. So I hope you have enjoyed this video and find the information presented here interesting. Again, your support really means a lot to this channel. Really give me the motivation to continue making interesting videos and to share my analysis with you. So please do not forget to click the like button and also to subscribe to our channel if you have not done that. And again, thanks a lot for watching.